TJ the Wheel Deal coming at you with another whiteboard presentation, and we're going to focus on MSTR. This is a big Strangle. Guys, year to date, negative $1.52 million, and we're utilizing $936,000 in capital requirement. So let's talk about it. What do we got going on? So here's the good news. We have 400 naked calls at 250, 11 days to expiration, with extrinsic value of $18,400. It's very unlikely that strategy is going to get to $250 in the next 11 days. So that part's nice, and we're already at about another $15,000 or $16,000 to the good as well on those naked calls. And then in the distance, 53 days to expiration, we've got 1,600 naked calls at 300, 53 days to expiration, with an extrinsic value of $259,200. So theoretically, if both of these work out, that's about 280 grand almost, right? That's going to reduce the year to date. That's going to reduce year to date to like negative 1.3, give or take, right? 1.25 negative. So that's the good news. The naked calls is the good news right now. What's the bad news? We've got 700 naked puts at 180 strike. And put my little marker away. 116 days to expiration with extrinsic value of 1.9 mil. And those are in the money. Those are in the money. How do we know that? Because the pre-market strategy is trading at 173. So it's a put. So 173 is below 180. So that makes that put in the money. So that's an issue because this is an obligation to buy 70,000 shares of strategy at 180. So why do you want to buy them at 180? Well, you can buy them in the open market at 173. So that's the problem, right? That's the problem in a nutshell. So what's the game plan? The game plan is to keep bringing the cash register on the naked calls. And then on the puts, we're going to wait until about 45 days to expiration on the puts, and we want to roll out and down for more credits. So we want to wait for about 90 days to come off the clock. And then we want to roll this out another 100 days or something like that. And we want to go from like 180 to like 170, 160. And hopefully we can do so for a profit. That's the game plan. That's the game plan. And essentially, guys, we're playing for a bounce. So this is what it looks like with my awesome artwork. We've got the puts at 180. We got the naked calls at 250, the naked calls at 300. And the puts are currently in the money because the share price is currently trading at 173. So as long as the share price is below 250, 11 days to expiration, we get to realize that 18,400. 53 days down the road, if it is trading below 250, we get to realize that additional $259 in premiums, which is the extrinsic value. And the idea, until we get to this 116 days to expiration, is we want to keep rinsing and repeating these naked calls right here and ring in the cash register about $300,000, $400,000 every month and a half or so. Because two things can't be true. Strategy cannot be trading below 180, 116 days to expiration, and above our naked calls if they're over here in the 250, 300 range. And once these expire, once these 53s expire, the 53 days to expiration, which is the 300 calls. And if strategy is still trading over here in the 170s, 180s, or 160s, or 150s, whatever it is, you can be rest assured that these 300s will no longer exist after we capture the majority of that extrinsic value, and we're going to lower those strikes to 250 so we can continue to ring the cash register more aggressively so that we can lower our year to date and go like negative $1 million would kind of like be the goal. Is we want to go from negative 1.5 to like negative $1 million. That's ultimately going to be the goal by the time we get to the 116 days to expiration. And then we're going to kick the can down the road again. And we're going to lower this strike from 180 to like 170, 160. And we'll be taking a lot of risk off the table at that point as well. And that's the idea, guys. So again, only sell short puts and naked calls or short calls on a stock that you don't mind wheeling and dealing for the next 3 to 5 years, because sometimes you're going to get in a situation where things go against you in a really, really big way, the way that they have here with strategy for us, and you find yourself stuck in this situation. The good news is I do think that Bitcoin is on the verge of a bounce. And if strategy pumps back up to like 220, 230, all is well in the world. Because if that happens like in the next month or so, then we're just chilling. And that year to date is going to flip from negative to positive, because the extrinsic value here is a lot more than what we're down year to date on the actual position. So anyway, stay tuned. In 20, 30 days, I'll give you guys another update, or possibly even after the 11 days is realized, because we're going to put those 400 calls up again, maybe even 500 calls again, and we'll probably do something in between 11 and 53 days to ring the cash register again for another $30,000, $40,000, $50,000 bill. TJ the Wheel Deal signing off. As always, remember, guys, stay blue, stock, stream. Peace out. God bless you guys. I hope y'all appreciate the full transparency.